Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, December the 20th. The year's 2023. Let's talk trading. Never lose again, part 2. These videos are for educational purposes only. Your results may differ from mine. Yesterday, Walmall, he had reminded me about, never lose again, and he kind of gave his take on it. I thought maybe I should explain a little bit more, where that came from and how things have developed over the years. When I first started trading, I actually traded way before the internet, back in about 1977 when I first got out of college and had my first job. And actually, my second job, when I started actively trading, and my first job was at Control Data, and I was part of the employee stock ownership program. So every paycheck, I would put the max I could and buy, stock in the company. Anyway, then when I switched companies, at the building we were in the third floor. Well, on the first floor, there was a stockbroker, so I had to walk by it, every time, I went in the building or left the building. So long story short, I went in one day, and this is, back in the early 80s, actually started in 1980. And it was back when you had the paper charts. You got your ruler out, and you drew your support lines and your trend lines and all of that. So then, fast forward to the 2000s, and we've got online trading. Actually, I think you could trade online way before then, but when I started it was in right around 2000, 2001, if I remember correctly. So, I went through the indicator phase, the indicator du jour, indicator of the day, and, got involved with the squigglies and basically, trying to find those magic numbers. Is it the EMA 5? Is it the, SMA 5 and SMA 20 crossover? Is it the 50, SMA 50, SMA 200 crossover? All of that stuff. And, looking at the different time frames. And as I mentioned yesterday, what had happened to me, I was going long, but on there was a higher time frame or higher EMA or moving average that was indicating short, and I traded against it, got burned, and that's when I developed that radar screen, multi time frame, multi indicators, and which has now become the dashboard, where you can look at different time frames across different pairs, using different indicators and all of that. Well, the whole idea was, when I missed that, I didn't want to lose again because I missed something. And so that's why, I did that. And so, and then since then, I pretty much have abandoned the squigglies, even though you use indicator 2 as a bias, or you can use the midpoint. I mean, the thing is, they're all derivations of price, meaning price is an input, and then you get an output. Well, let's just stick with price. And I started saying things like, price is the same on all time frames. If you look at the monthly chart, we're there. If you drop down to the weekly, price is the same. You drop down to the daily, well, price just moved a couple of points, but I think you get the drift. It doesn't really matter what time frame you're looking at, because it's all compressed data. I mean, you have a starting time, an ending time, and between the start and the end, price is going to make a high and a low. And people just, for some strange reason, traders aren't, well, I guess the strange reason is they're not taught that. I mean, nowhere does anybody that I've seen really talk about the data compression on the charts. And, the reason I understand it's because my background's computers. computer science, so I know all about data, data compression, etc. And, during college, I happened to take a statistics course that, I have just enough knowledge of statistics, a lot better back then than I do now because I only use a few things now, to understand how I can use statistics, for trading. So knowing, certain things about price movement gives me a slight edge to allows me to guess a little bit better. We have the smart ranges where you know what percentile price is. Prices move, based on however many periods of data you want to feed into the indicator. So, we know about the flip-flop boxes, how often the prices flip-flop, 50% of the time. How many times do they go 2 times in a row, the same candle color 3 times in a row? And that's why I have the candle color multimeters to tell you how many times in a row prices moved a certain way. So here on M30, we've got 3, green or white candles or bullish candles in a row. How often does that happen? Versus, how many times does it flip-flop? And then how many times does it cover versus not cover? So all these little different things. But the funny thing is, that can help, but that's really only part of it. So what you have to do is set up your method where, whatever you want to use for an entry trigger, whether it's candle color at the line, a squiggly line cross, trend line break, a high-low break. Those things matter, but it's not the only thing that matters. You have to, manage the money, as Walmart likes to say, protect your capital. But it's just one of those things where, if you don't want to lose, then you have to protect your capital. And if you don't want to lose, you have to make sure you take all your signals, because you never know. On any one given trade, it could be a winner or loser. You don't know ahead of time. And that's why you have stop loss. Or that's why you should have a stop loss. When I first started out, in the trading, the the buy zone, which was one of the first methods that I came up with when I was trading stocks, everybody would always ask me, well, where's the stop? And I'm like, I used to say stops were for sissies. But that was because, to me, it's like, if you go short and then price comes here, well, your method's telling you to go long. What do you need a stop, a quote unquote stop for? And then people go, oh, you do this, you get cut up. Well, I mean, here's a chart today. I don't see a cut up. But some people just like to argue. And that's something I wish I would have paid attention to back in the day. And I would have just thanked people for their opinion, but not debate them. Got me in a lot of trouble. That and a few other things. But trouble with the brokers, that is why I got kicked off a trade station and kicked off a e-signal. And the funny thing is, e-signal wasn't even a broker. They were just a trading a charting service. But it's just that my code was slightly better than the stuff they were peddling. And it's just kind of funny how they shut me down because I was giving it away. But that's just because I didn't want to see bad code, people spend good money on bad code. But anyway, back to the point about never losing again. It's just one of those things where, you enter trading for one purpose, and that's to make money. Well, people tell you all these different things you have to do and their methods and all. But, and even some of them will say, well, you put the stop here. But for some strange reason, it just seems like none of those things work out for most people. And why is that? Well, part of the problem is if you don't follow the recipe or the trading plan or the method or the system, it's not going to work. And they'll say, well, how about you just get an EA and it'll take all the trades? Yeah, but here's the thing. If you had an EA that did everything perfectly, it should win. But why don't these EAs win? Because if somebody had that EA or that robot, whatever you want to call it, that they would never sell it. I mean, they would just sit there and just slaughter the market and drive Ferraris and live in fancy beach houses and build, compounds like Zuckerberg's doing out in Hawaii, right? So, obviously that's not going to happen. And see, the thing about trading is, a lot of people have lofty trading goals. They want to make 50,000 or 60,000, or, they might, want to make 69,000. They might have some specific number that they want to make. But the thing is, you're not going to get there all at once. And it's like, maybe if you focused on, hey, how about at the end of the week, I've made more money than I've lost. Start something, a simple goal like that by the end of the week, you're profitable, whether it's 1 penny, $1, $10, $100, whatever, but you're profitable. And you do that week after week. If you can do that, then you're on your way. Because the thing about trading is, it's just a matter of scale. See, a lot of traders want to keep trading. They want to do, 100 trades a day, or, 500 trades a day, or whatever it is, 50 trades a day. And that's not it. I know there was a couple of traders, they just wanted 1 trade a day. They made their 5 pips, but they were, wagering somewhere around, upwards of $100 or more a pip, $125 a pip. 5 pips, not a bad profit, right? Walk away after commission with, $500 in a day. And it only took them maybe an hour. But, once again, they had their goal, their method. They understood what they did. They traded that. They picked the pair that they wanted to trade, and they just did it day in, day out, every day. And then they do it, then they hit it and quit. It was like a job. And, some jobs you get paid by the hour. Some jobs you get paid by the job. So if the job takes you 5 minutes, or if it takes you 5 hours, the pay is the same. And that's what you have to kind of look at trading like. So, and then sometimes you just have to say you have a, $500 a day goal. But, maybe you're up 150, but trading's just been tough. Why push it? Say, you know what, today I'm just getting beat. Or it's just tough. Maybe you want to sit there and stick it out, but, maybe you go after a couple of hours, maybe you need to take an hour off, a breather, get away, clear your head. Or you might just say, you know what, that's it. I trade from 8 to 10, whatever I make, and that's just the way it is. So, fellow traders, fastest 15 minutes in trading is just about up once again. So I think I'm going to have to revisit this some more because, I know there's some traders out there that really want to make it. They've come to me, and talked to me on the phone. We've traded emails, messages, and I really want to help the traders out there because, I've got a few decades of trading under my belt. So there's a couple of things I might be able to pass on that can help you because I learned a long time ago, it's not what I trade, it's how I trade it. So it's not what you trade, it's how you trade it. So go out there and drain the banks. And this is the Rumpled One, over and out.